The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Have we got to start the show? Should we do it now? Okay, let's do it. Welcome to Squawk Box Europe. What? 6 o'clock, we've got to start the show.
We got there eventually.
6 o'clock somewhere, 7 o'clock in London. Good morning, Juliana Tattelbaum. Good morning, all of you. This is Squawk Box with the aforementioned Juliana Tattelbaum and myself, Steve Sedgwick, and we are ready for the show. These are your headlines. US stocks close higher, driven by a number of key AI names and boosting hopes of a year-end Santa rally.
Bitcoin surges toward the 94,000 level, regaining ground after a rapid recent sell-off. And Russia and the U.S. failed to reach a compromise on a peace deal for Ukraine, despite 5 hours of talks in Moscow. Vladimir Putin's top policy advisor calling discussions constructive, but saying they remain split over territory.
I can't do this every day of December.
Okay.
Every working day we're going to have to say, Santa rally's on, Santa rally's off, Santa rally's on. And we did that yesterday. Brilliant, we've got amazing producers. They do all the hard work, Matt and Mike and all the team. But like yesterday was like, no sign of a Santa rally. Today, got a Santa rally. It's like, we can't do this every day, everybody. We can't do it. And the fact of the matter is, not a lot is changing. I don't know if you've noticed much that's changed in the last 48 hours or the last couple of weeks, but it was like 2 weeks ago. In fact, why don't we show the VIX of the last couple of weeks as well, the volatility indicator. Some of you believe it's a fear index. I think that's nonsense personally. But look, the last 2 weeks, look, we were heightened. We were at like 27. It was massive. And the VIX has tumbled as the markets found a bit of form. What has changed in 2 weeks? I mean, I'll show you the NASDAQ. Look at the NASDAQ. It's had a brilliant rally. We're all worried about profitability of AI and concern about cryptos and this. It's had a 3% rally in the last 2 weeks. Great boards, by the way, guys. I don't know how you knew to get them ready. But it's just like nothing has changed. In fact, the only thing and I'll let you get in a word in a moment, maybe. But the only thing that I can see has changed is actually things have got a little bit more concerning.
Okay, what things are you talking about here?
Good story on CNBC. OpenAI under pressure as Google and Anthropic gain ground. Another good story going around. Anthropic starts early. IPO prep ahead of possible 2026 debut, which apparently is way ahead of what OpenAI are going to be ready with their IPO as well. If, from that headline, Anthropic, Google and OpenAI are all moving ahead very aggressively, but we don't know who's ahead on this battle.
Yeah.
What does that mean? That means that they are stunningly competitive, and it's great, and it's going to become diffused as technology always does. And it also means that that technology is going to become commoditized, which means the margin they're going to get from it, from this massive investment, is going to be less. That, for me, is concerning because there's going to be no NVIDIA-like moat system for one of these chatbots or AI models. So everyone's going to be there at the same time or similar time as well. They're not going to be able to commoditize it to a fraction of what they thought they could if they were the only ones doing it.
Probably depends on what specifically we're talking about here. If we're talking about the chatbots, I think you make a very fair point. On the other hand, when you look at what these companies are doing, they're investing heavily in cutting-edge AI research, and we don't really know what that's going to yield as of yet and whether that's going to be the same sort of commoditized dynamic that evolves from there. I do think it's fascinating how quickly OpenAI's moat seems to have eroded. It didn't take a whole lot for Gemini, Google's rival product, to leap ahead and basically leapfrog ChatGPT, which is what we're dealing with here, this code red, the company-wide memo that Sam Altman sent to employees on Monday.
I mean, that's like, it's not like code amberish. Code red is like, gee, we're in trouble here.
It's like, hold on, stop doing everything else and just focus your efforts on making this chatbot better because we don't want to lose this competitive advantage that we have. And it is really striking how fickle users of these chatbots appear to be. And I think it's not new. It's not surprising that we don't yet know who the winners, who the losers are going to be. But it's come about a lot more quickly, I think, than some had anticipated. And for OpenAI, it's certainly worrying given the valuation.
What did we start off earlier in the year with? The DeepSeek moment. And that's just gone. So we're not even just talking about these three players. You know, it could be the Chinese, it could be anyone. It could be another player in the United States who suddenly comes up with a really amazing learning model that doesn't cost all this.
I think that's actually a great thing to bring up because many are saying that Gemini, although it happened a little bit more quietly than DeepSeek, is actually a more impactful moment than the DeepSeek moment. The fact that Gemini just last month came out with their new upgraded model, and it is taking share so rapidly from OpenAI.
But before we move on, just bring that back to my point about Santa on, Santa off. You know, have we been good? Have we been bad? You know, I wrote my list. I don't know if anyone's going to be looking at it as well. You know what's on my list. But the fact of the matter is, it's the actual news flow isn't particularly bullish. It's not particularly bad, but we're still having this oscillation, and we're still having the massive downtick followed by a very, very strong rally. And I'm not entirely sure what the catalysts are, apart from the momentum traders being back in the market and, of course, liquidity. And
I wouldn't underestimate the impact of timing here, that we're heading into year end, and we know that it was obviously crucial for payouts for a lot of these portfolio managers, so that can affect dynamics as well.
Well, that speaks volumes, because there are two types of people who, what you're saying, massage performances into the year. The ones who've made loads of money in the year, and I know this from when I was trading. If you had a really great year, you mark things down a little bit, so you had a little bit of a bump when your P&L was 0 on 1st of January. And the opposite side of the equation, if you were having a howler, you might have really tried to ramp things up towards the end, or legally, you know, just to try and bump up that final figure. Yeah,
and I wouldn't underestimate the impact that that's having on the market right now.
How are the markets?
Let's take a look right now. This is how U.S. markets fared yesterday. You had modest gains across the board. The Nasdaq added about 0.6%, S&P 500 added about 0.25%, and the Dow also moved higher. In terms of sector performance, yesterday we saw energy trade down by about 1.3%. Industrials was the best performer in the U.S., so that sector rallied about 0.9%. On to Bitcoin. Now, notably, Bitcoin did enjoy quite a rally yesterday, surging above the 91,000 mark. Now, this morning, we're up another 2+%. We're trading just below the 94,000 mark. So the volatility in Bitcoin continues, but it's certainly notable that we have crossed back above that $90,000 mark. And one of the boosts to crypto in yesterday's session, comments from SEC Chairman Paul Atkins, who told CNBC plans to ease crypto regulation are set to be released shortly. Take a listen.
We have enough authority to drive forward. I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track, and we will be able to forge forward with the crypto area and make sure that we are able to embrace this new area of innovation that for too long the United States basically has just pushed back against.
Let's get you a check on Asian markets. We've got the Nikkei 225 trading higher by more than 1%. The Kospi in Korea also catching a bid, but Hong Kong markets trading lower this morning. The Hang Seng down about 1.25%, and the mainland market in China also on the back foot this morning. Let's take a look at Asian tech stocks. Right now, we are seeing strong gains, in particular for SoftBank. SoftBank Group shares up more than 6%. The fate of SoftBank shares has been closely tied to what's been going on stateside with the U.S. tech giants. So that has been moving around quite a lot, that stock, in recent trade. TSMC also trading up this morning, 1.4% higher. We are also seeing gains across Samsung Electronics and Tokyo Electron. In terms of European markets, here's your early look at the trade this morning. We are looking at modest gains across the board here in Europe as well, so tracking what we saw stateside yesterday. In terms of U.S. futures, this is the early look at Wall Street. We're also looking at further gains there. Again, fairly contained, but the direction of travel continues to be higher from here.
U.S. President Donald Trump says he'll announce his choice as next leader of the Federal Reserve early next year, and teased that person could be Kevin Hassett, as he signaled the potential contenders had been whittled down to one. On Tuesday, the White House said a round of interviews with finalists for the job had been cancelled, though the press secretary Caroline Leavitt said those meetings will be rescheduled. And that final decision has not been made. Paul Skinner is investment director at Wellington Management and joins us now. Paul, good morning to you, sir.
Good morning, Steve. Great to see you.
Do you want to look backwards or let's look backwards before we go forwards. It's that time of year as well. In terms of 2025, what kind of macro environment are we finishing the year on?
We're finishing with, everything looking pretty good. This is price for perfection. We've got equities at all-time highs. We've got credit spreads at 15-year lows. I mean, we're looking really as though everything is going to go perfectly next year. We think the probability of that perfection happening is actually a low probability event, sort of 20%. We have a higher probability, a much higher probability, of around 50% of an uplift in economic growth, yes, which supports that pricing, but we see inflation as part of that uplift.
If your Goldilocks economic scenario, which is your 20% scenario, is not the case, then there is an enormous opportunity to take advantage of that pricing in credit spreads and equity valuations. But it's a very tortuous and difficult thing to do if you're trading this from the short side, from the negative side.
Yeah, I think that is true. And I think we're going to continue with the risk rally because we see a lot of indications that the economies around the world are going to respond to the huge stimulus they're receiving at the moment. We're reducing monetary policy to real rates of zero. We've got massive fiscal stimulus, U.S, Germany, Japan. All of this means that demand is going to lift, and we're already seeing the indications of that. But the supply side is restricted by the fact we've got tariffs, we've got protectionism, we've got geopolitical risk, everyone's shortening up their supply chains, and we've got good old China, who have exported deflation in the past. Anti-involution is now reducing their capacity. So we've got great demand coming on, we've got problems with supply, and for us, that equals inflation. Now, it may take a while for the market to realize that inflationary pulse is coming through and for central banks to react. But that's going to bring volatility as we go into the second quarter of next year, and we need to be ready for that. We need to be nimble. We need to be looking at how we can be active and manage that.
When it comes to this inflation that you're expecting, where do you expect to see it most prominently, and what kind of levels are we talking about here? How bad could it get?
Well, I mean, there are a couple of countries that are right on the edge. I mean, UK has always been the poster child for that. But even in places like Japan, where historically has been zero inflation, we see now inflation, up above 2.5 and continue. And I think the really important one is obviously the United States, where when you look deep, when you look at the PMIs for input up at 63, output 53, that's a CPI level of about 3.5%. Now, that is way above where the target is. And the crucial thing for us is if you see labour numbers improving, and we've already seen a little bit of indication, 100,000 new jobs created when we were used to 20,000. If we see labour numbers increasing when inflation's above target, that's going to make the Fed job very, very difficult, regardless who the chairman is.
So what do you think the Fed does next year, if this is your base case?
Yeah, well, I think we'll probably get a cut in December. That's 90% laid on. But I think after that, it becomes a really, really difficult debate. And whether it's Kevin Hassett or whoever that shadow chair steps in, they are going to have to be very careful about how they lead the market to what they're doing deeper into next year. So potentially we may not see cuts next year, and that's going to be a big change for markets.
Why shouldn't the debt load of governments, of companies exposed to new technologies, the debt load exposed to individuals, why shouldn't that be a problem if your inflation scenario is correct and actually rates have to be higher for longer? Surely there is a concern that there'll be creaking somewhere in broader debts, sovereign debts, bank debt, non-bank debt, AI-associated debt. I can't help thinking that one of those concerns won't come to the fore.
You are so right. And, that's another theme that we think is going to be true for next year, is dispersion. You're going to suddenly find out where the heavily indebted companies are. Some of these companies that have been borrowing in public markets and in private markets, we're going to uncover, some of that stuff that's already started to show idiosyncratic problems. So I think you're absolutely right. That if we don't see yields roaring up, but where they'll stay here, maybe rise to the top of the range they've been in, and that's going to put pressure on those really irresponsible companies and allow sensible, good research to find the ones that are still responsible and differentiate, find that dispersion, and profit from that.
You mentioned Japan and the inflation picture there. There's been a lot of focus on Japan this week with bond yields rising to levels we haven't seen for decades. In some cases, the 20-year, I think, has risen to the highest level since 1999, and the 10-year back where it was in 2008 here. What do you make of the outlook for Japan and the implications for markets?
Our macroeconomist, John Butler, has been right on this theme for the last year and a half, 2 years, where he really believes that Japan needs to move rates up much more than they have. And, currently the market's pricing 50 basis points next year. We're thinking much more in the line of 1%. Take rates up, closer to 1.5%, 2%, which we think is neutral, because that inflation that we've spoken about is truly embedded. If you look at corporate profitability in Japan, it's up at 17%. Expected was 3%. So, and you've got record levels of profitability in corporate Japan. And there we have one of the biggest fiscal stimuluses, lined up with Takachi, having 1 to 1.5% of GDP on an annual basis. So we're very positive on what's going on in the economy in Japan, what's going on in the equity market, but that will have to come with higher monetary policy. And
that's great, and we'd love to see Japan firing on all cylinders. But it comes with a problem, and a massive problem as well. The Japanese hold enormous global assets, global foreign reserves and what have you. If the Japanese repatriate, and we're seeing the end of this, not the end of, but a diminishing of the carry trade as well, those Japanese assets, whether it be in US treasuries, whether it be in stock markets around the world as well, will come home, because they'll get a much better interest rate on their 10-year and in their own stock market as well. And of course, if the currency is appreciating thereafter, again, another reason to bring the money back home as well. Why isn't that a problem for everyone else?
It is a problem for everyone else. And it means that, the enormous debt burdens that most of the sovereign...
because you've already, in your first answer, talked about the fiscal largesse of countries as well. So someone's got to pay for it. And if the Japanese are taking their money home...
Yeah. And that repatriation, we think, is going to make the central bank's jobs even more difficult. So, you look at the United States, and already we're seeing repatriation, both back to the UK pension funds coming home, and that's going to continue, and that puts a real challenge on the Federal Reserve.
You don't mean that, do you, by the way? UK pension funds bringing their money home.
They're less
UK
overweight.
pension funds.
They're less overweight.
You know this better than I will ever know this, Mr. Skinner. The UK pension funds hold record low levels of UK stocks. They're not...
UK. No, that's right, because they're very overweight the US. And so that's coming back. They're coming back home.
It's coming home. It's coming home.
Well, maybe.
It's a very famous song.
Exactly. But and I think that's true for European savers as well. They've had huge amounts in the US. So I think this is an issue that we need to think about, central banks need to think about, to protect the funding that they're doing for their own sovereign debt.
Lastly, on the geopolitics, I'm curious how closely you're tracking the Russia-Ukraine peace talks. It's sort of hard to gauge how much markets are rating this as a potentially market-moving affair here. It seems like it's happening in the background, but if we actually do get resolution, surely that could have massive implications for Europe.
Yeah, we're very excited about Europe. Let me make it clear. We think the European economy is actually on the verge of a really nice breakout, and that's all to do with the fiscal stimulus in Germany. I think we have in the back of our minds a positive, concept if Ukraine does get resolved. I'm sorry to say, and I don't like to end on a miserable note, that we actually think that the Ukraine-Russia story is going to grind on and on and on. It's very unlikely we're going to get a resolution here. While Putin is still making ground, he's unlikely to sue for peace. And so I'm afraid that our prognosis, and has been from the start, is this is going to be a very long, drawn-out problem.
Well, fair enough, and we appreciate the insight. Sorry to end on the downbeat note, but we appreciate the wide-reaching conversation. Paul Skinner, Investment Director, Wellington Management. Coming up on the show, 5 hours of talks in Moscow, but no Ukraine peace deal. We'll bring you the details and the sticking points, plus Zara owner Inditex reports a strong start to the holiday season with November sales up a better than expected 10% as Q3 sales also top estimates. But before all that, Nissan CFO Jeremy Papin says the company is competing in China, where many other automakers are struggling to keep up with domestic firms. That exclusive interview is coming up next.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts. I think this is fascinating, genuinely. Anthropic is reportedly in early talks to launch one of the largest IPOs in history as early as next year. That's according to the Financial Times, which says the AI company is also currently discussing a private funding round that would value it at more than $300 billion. Here's a question for you. Why would you need to IPO if you've got a private funding round that will take you to $300 billion? Unless you're looking for an exit. Just saying, for a friend. It comes as OpenAI CEO Sam Altman reportedly issued a company-wide code red memo this week, urging staffers to improve its widely popular ChatGPT product as it combats growing threats in the chatbot space. What do you think? Well, we're showing the board. We can show the performance of these. By the way, and we're looking at this as NVIDIA and Microsoft, the two bottom lines on the screen, more associated with OpenAI. Alphabet and Broadcom, obviously, with alternatives. And it's not that pure a chart, but it kind of just shows you the disparity in performance over the most recent quarter. You were going to say something?
Well, I was going to say, I think Alphabet has been the story of the last few weeks here, that it has emerged as a serious competitor, not only to OpenAI and ChatGPT from a chatbot perspective with Gemini, but also from a chips perspective to NVIDIA, the fact that they've been making so much progress on the chip front. So Alphabet, I think, it has really emerged as a potential winner here, and that is a different story to where we were several months ago, where it was sort of just among the pile of the tech titans. It seems to have leapfrogged over the last few weeks.
Yeah, I just think it's. I find this could be one of those key moments. If they're all rushing to IPO, but they can all raise vast amounts of money in the private sector, it still gets me slightly skeptical about what's left for the retail investor if they do go public, these companies, when, quite frankly, they're having zero problems making money in the private, raising money. Making money is a different thing. Raising money in the private sector. I don't know. I'm not saying I smell a rat, but I'm just saying, why would they be rushing to IPO when there are hundreds of billions of dollars available for them in the private sector?
It's
Squawk Box Europe. I know, get involved with Steve.Sedgwick. There you go. Steve.Sedgwick or Juliana Tattlebaum. In fact, all email her today. There you go. No. Juliana.Tattlebaum. Do you want those emails?
I don't think we have long enough on this segment for me to spell out my entire first and surname.
And I love you doing it. How many years have I been working with you? A few.
Lot, yeah.
And I still don't know how many L's and T's.
You add a couple extra syllables when you pronounce my name. One of the producers has pointed out it's amazing. And there's a lot in there, naturally. Let's push on, but do send in your feedback and your thoughts. Would love to have you part of the conversation.
Is that more syllables? Juliana.Tattlebaum. I mean, there's about 20 syllables in there, isn't it?
It's Steve Sedgwick. It wasn't my choice.
It's a lovely name.
Well, thank you.
And I know your middle name.
We'll keep that under wraps.
Okay.
China has issued the first wave of new rare earth export licenses after widespread disruption following the introduction of export controls in April. It follows a meeting between Presidents Xi and Trump in October, which aimed to reduce trade tensions between the world's two largest economies. Now, Nissan CFO Jeremy Papin says giving maximum autonomy to teams in China has allowed the company to successfully compete against domestic rivals. Speaking exclusively to me, he said Nissan's approach in China is driving global success.
Well, we've been enjoying now year-on-year top-line growth in China since the month of June. So that's been really something that's been kind of pulling the company, and it's a good story for Nissan in China. And there's a lot of lessons that we can learn from how we improved our situation in China to make it relevant globally. And then we have new cars in Japan. There's a lot of new model activity in Japan. We have a new Roox, we have a new Leaf, we will have a new Kicks. We've announced a new Elgrand. We are launching our flagship Patrol. So the showrooms in Japan are going to be transformed just within 6-9 months. And that's very positive for the Japanese customer that needs to hear and see Nissan for products and technology, not only the restructuring. We have new launches in Europe as well. And we continuously renew the brand in the USA. So all markets, all key markets are benefiting from this new model cycle.
It's really interesting that you're seeing progress in China specifically, because clearly the Chinese competition is really heating up, and in particular the Chinese have shown incredible achievement in getting new product to market quickly. How do you compete in China, and in particular, how do you accelerate the process of coming to market with new models?
And what you describe is exactly what Nissan went through 2 years back. Spring of 23, big discussions inside the company. What should we do in China? And the decision was we need to be more Chinese for China. We need to make sure that maximum autonomy is being given to the local teams so that they really build fast the cars that the Chinese customers want. And with that specific attention to no one else than the China customer, and a goal of trying to get cars on the road in 24 months, which was much faster, more than 2 times faster than what the company used to do. We came up with a first key model that's Nissan's N7 that we launched in April, and since then those sales have been meaningfully better than we initially expected. And so now we're just rolling out a whole set of cars. We'll have a total of about 10 over 2 years, and those have a China focus, China cost base, and they were developed at China speed. And as I said, now that we see that momentum and how relevant the Nissan brand is to the Chinese customer when we have good products, we're learning a lot about the speed and the competitiveness of what we've done in China to take it over and bring it into global. And so some of what we're changing in the company now is being infused with what we've done in China in the past few years.
If I may say so, Giuliana, that was a fantastic interview.
It was. I think the Nissan is undergoing a major transformation, and part of the transformation is making themselves a lot more accessible, especially to Western media. So it was great to get the insight into what's going on and have such a lengthy conversation.
It was well worth you hanging around 3.5 hours, 4 hours after the show to get. Well done, you.
It was. No, it was a really fruitful conversation, I have to say.
Did you get your admin done in the meantime?
I was preparing for this show, doing a bit of reading, doing a little bit of admin, that's true.
Superb.
But turns out Jeremy and I actually have a shared history. Starting out at Deutsche Bank, he was on the sell side as well.
You were at Deutsche Bank?
Oh, did I not mention that? I have a little bit of experience in chemicals specifically.
No way.
If you ever want to chat chemicals. I thought, I
don't like to talk about derivatives. We are terrible. No, you're amazing. It was a great interview. And you can check out the full interview with Nissan's CFO in full on CNBC.com. Would you like to know what the European futures are doing? They're doing this. The CAC 40 trading around the flat line, but the FTSE MIB and the Xetra DAX pushing ahead.